Hey, what's up, my friends? Welcome back to another week of the weekly market analysis. But before I continue, I think there's something that I want to say, that I haven't been saying enough. And the thing is this, right? I want to say thank you, all right? Thank you for, being with me each and every week, all right, to hear what I have to say about the markets, my own analysis, my trading, etc. So I would say, I really appreciate your support, the words of feedback, the encouragement that you've given me all along. So I want to say, a thank you, a very big thank you that, yes, I do know that, you're here with me and I really, really appreciate it. And for those of you who are new or this is the first time you're watching this video, so my name is Rainer and basically what you're watching right now is the weekly market analysis. So basically what I do is this, right? I'm a trend follower. I like to trade trends in the market. So each week I put out a video. I talk about the markets. Basically, I would say, usually markets which are trending. I usually talk about setups on a 4-hour and a daily. And the reason is this, right? It's because of the fact that, if I were to post trading setups on, say, example, the 15 minutes time frame, the 5 minutes time frame, by the time you watch the video, the move is already over. So instead, I decided to, go up the higher time frame, share with you, my thoughts on the markets. And, perhaps when you see this video, you could actually, take advantage of these trading opportunities that I've identified as well. So that's basically it, alright, on the weekly market analysis that I do each week. So along the way, we talk about trading setups, we talk about psychology, we talk about trade management, we talk about risk management. So a lot of stuff, a lot of tidbits along the way. So if you're new to this, alright, I will encourage you to subscribe to this weekly market analysis. The button at the bottom right, you can subscribe to this, to my YouTube, and you'll see these videos posted up almost every weekend. So yeah, so on this week's market analysis, I think, we'll be talking about the currency pairs, like the euro dollar, the pound dollar, and also on the S&P, on why I'm actually bullish on it. Then we'll talk about, natural gas as well. So all this and more in this week's market analysis. I'll see you there. Okay, so let's start off with the euro dollar. This is the weekly chart, and watching the euro dollar, we noticed that last year we have this massive sell down over here, and this year what we have is just basically choppy price action, which looks somewhat like a pullback. In the grand scheme of things, right, it looks like a pullback on the longer term downtrend. So when you see this kind of pullback, you know that on the lower time frame, like the daily or the 4-hour chart, it's going to be difficult to adopt a trend trading approach because price is just basically, whipsawing back and forth. So if you look at the daily chart, here's what I mean, right? This is the swing high, I can highlight it here, the swing low, right, or the support. And you look at it, right? It's going to be difficult to adopt a trend following approach because price is just basically bouncing off the highs over here and bouncing off the lows over here. So instead of adopting a trend following approach, what you could do is adopt instead, a swing trading approach. Meaning if price comes towards the highs of the range, you can look for a shorting opportunity in anticipation for price to revert back into the lows of the range or the middle of the range. Similarly, if price, comes back towards the low end of the range, you can look for a long opportunity in anticipation that price would revert back towards the mid of the range. So in different market circumstances, right, you definitely want to adopt a different trading approach, right? Because if you adopt a trend following approach, like, based on all the trend trading setups I share with you, right, the 20 and 50 period moving average, this you're going to get chopped basically, non-stop. You're just going to get chop. So different markets, different trading strategy, and this is important, right? So you can actually basically, make money in good markets and save your money in bad markets like this. And on top of it, if you want to go it one step further, not only that do you want to save money in this type of bad market conditions for trend follower, you can even adopt a different trading strategy to take advantage of this type of market conditions, which is clearly, not favorable for trend followers. But hey, it is good for swing traders, right? Especially traders who like to trade off the highs and lows of a range. So this is my take on euro dollar. So pound dollar, again, something similar, right? You look at this daily chart, it's also trapped within this range over here between the highs of 159 and the lows of 151 over here. So same story, right? If you're a trend follower, this entire chop will basically get you stopped out of your trades. But if you're a swing trader, I would say this area and this area is area where you want to do business from, right? These are locations where you can actually, identify potential trading opportunities. So these two are the areas I'm looking at on the pound dollar as well. So now let's move on, right, to the Aussie dollar, shall we? Right, so looking at Aussie dollar, all right, clearly this is a much trendier market compared to the euro dollar and the pound dollar. And yep, fair enough, right? If you have a trending market, then yeah, you can apply a trend following approach to your trading. So let's look at the weekly chart. You notice that, oh wow, right, the trend is still clearly intact on Aussie dollar, right? Looking at the 20 and 50 period moving average, it has been respecting this zone for, I would say, a couple of years now. So since the trend is down on a weekly chart, right, we can go down to the daily chart and identify, trading opportunities. So basically what we had, right, recently was that, price was respecting the 20 period moving average, this red line over here. Then we have this pop higher, and then price traded lower. And this week it traded, over the last few weeks it traded higher, and this week basically, we have this consolidation over here. So for traders, all right, depending how you want to trade this setup, there are traders who just go short on this swing high over here. There are traders who waited for confirmation, right, like a candlestick pattern, like this bearish engulfing pattern. Some traders waited for this signal to go short. That is fair enough, right? Those are two possible trading setups that you could employ. And basically your job as a trend follower is just to ride trends. Your entries will definitely vary from traders to traders, right? Some traders have different way of entering the markets. They are looking for different trading signal, right? They're looking for different trading, I would say, confirmation to I would say, to make them feel more comfortable in executing their trades. So yeah, there is no right or wrong, right? Basically what you want to do is identify the trend, get an entry, place your stop loss, and ride the trend. That is your job as a trend follower. So now, aside from this trend, what market I want to point out is basically the S&P as well. I think the S&P market has been a difficult market to trade over the last few months or even the last couple of years. Let's look at it why. So basically the S&P, we had this rebound over from the low of 2009. Then we saw this very nice, beautiful uptrend, right? Priced on a weekly chart, respecting both the 20 and 50 period moving average. The red one here is the 20. The blue one here is the 50. So it has been respecting it very nicely. But in recent months, right, or maybe the entire of 2015, look what happened. Price basically got into this range over here, this very tight range, whipping back and forth. So if you're a trend follower, you're going to get, stuck. You're going to do badly in this market as well, because most breakout setups fail. Most pullback either, didn't come to your desired pullback level, or, retrace too steeply. So this market condition was bad. So looking at the chart, I think the surprise that caught most trader off guard was this big sell down, all right, or sell off wick over here. You can see basically most traders, were caught off guard. Those who are, long-term permanent bulls kind of approach, this would have triggered a lot of stop loss. Then we have this, further selling, and then price push all the way back up and closed over here. So when you get this kind of, volatility spike in the market, right? Look at these two candles, this one over here and this one over here. When you get a huge volatility spike in the market, what usually happens is that price will tend to range, because the markets are caught off guard, they are confused. So everyone, I would say a lot of players in the market are confused, so they do not know what to do. So they don't want to establish their position yet till the dust settle. So usually what happens after this is that the market will tend to consolidate, right? The price would find, I would say, price will be entering a price discovery mode, right? Identifying the highs or lows of the range, and after which those range are clear, the participant can see clearly, then only then will they start to establish position and hopefully see if the trend can resume. So what I mean by that is, you see on the daily chart, you notice that this massive sell down over here was the one we saw on the weekly chart. Then we have this buy up over here. Then basically, at this juncture, traders are confused, all right? Should I be short or should I be long? If I'm short, well, I have these two bullish candle over here that, maybe stop me out. But if I'm long, the overall trend still looks bearish. So what should I do? So what most traders do is that they just stay out of the markets. So when most traders, they start to, stay out of the markets, they don't want to, trade too actively, what you get is just basically a range like this, right? Price is in a, the market is in a price discovery mode. Identifying, where's the area of value, identifying where's the highs like here and the lows. And from here, once you've identified the highs and lows, then yes, you can make your trading decisions based on here once more. So for me, it's very simple. If these highs, all right, if price close above these highs once again, I'm going to be bullish, right? Because it's clear, right? Because the recent swing high, price has broke and closed above it, then yes, I will be bullish. So right now, I'm bullish on the S&P, But just because I am bullish, it doesn't mean that, I have a position on it. It doesn't mean that I have a trading setup on it. Right? Just because I'm bullish, it doesn't mean I have to enter the trades. So I am bullish on the S&P and I'll watch along, right, in the next few weeks, how it develops and see whether there is any trading setup that meets my plan. So that's my take on the S&P. Hopefully you manage to get some, something out of it. And last but not least, let's talk about natural gas, shall we? Natural gas. I think it's a market that I've talked about quite a bit over the last few weeks especially. So if you look at a natural gas, you look at the daily chart, you zoom up, you notice that natural gas has been in a consolidation for almost the whole of 2015. And in this consolidation, once again, right, trend follows, they do badly. I recall, I think towards the end of this downtrend, right, before the consolidation began, I was getting stopped out of my trades repeatedly on natural gas. I believe I posted a blog post, how I lost 8 times in a row trading natural gas. So after that, we got this consolidation, and the picture looks much clearer right now. And if you look at it, natural gas, what happened is that we have this break and close below the multi-year lows. So when you get this, it's a signal, right? Because price has been ranging for sustained period of time, and finally price broke and closed below it. So it's telling you something. Right? It's telling you that the bears are regaining control. So basically, I went short when price broke out of this multi-year lows over here, and it wasn't an easy trade. I had this retracement going against me. So at the back of my mind, I'm thinking, could this be a false breakout? Because I admit the possibility of a false breakout, right? If it's a false breakout, then I had better, exit my trades. So basically, I had my stop loss, I think, somewhere over here. So I didn't got stopped out. So again, what happened this week was that, price, well, it seems like it's going back into my favor, that we have this bearish engulfing pattern, and Friday closed lower as well. So it's still too early to say whether, what or how this trade will, unfold itself. But I'm short on natural gas, right? I know that I'm trading near the multi-year lows, and if you could break the multi-year lows and, form another trend, right? You look at the monthly chart, possibly, retesting the all-time lows over here. So we shall see, right, what happens on natural gas, right? Because most traders will look at this chart, right? Or when we look at a weekly chart, oh, Rainer, look how low this price is, natural gas is undervalued, it's oversold, blah, blah, blah. But hey, I'm a trend follower. I don't think along the lines. My thought process is, if price is trading lower, I look to short. If price is trading higher, I look to long. As simple as it is. And of course, with proper risk management, etc. So, but basically, these are just my line of thoughts, right? I don't think contrarian, but I think with the trend, with the herd, with the smart money. Okay? So, yep, that's all I have for you in this week's market analysis. I hope you find it useful. If you have any questions, any queries, right, you can leave me below in the comment section below. So with that, I wish you good luck and good trading. I'll talk to you soon.